Hi everyone, we're delighted to be joined by Jamie Douglas, Fund Manager of the Polar Capital Healthcare Trust, for a Q&A on his outlook on the global healthcare industry. So Jamie, first of all, what is the long-term outlook for global healthcare stocks?
So good morning and thank you. We're really excited about the long-term outlook for healthcare. There's ongoing structural changes that we believe will yield dynamic growth opportunities and interesting investment themes. We're also in a situation at the moment, particularly in the US, where relative valuations are attractive, and that feeds into our positive stance on the sector.
Great, and could you discuss the significant structural changes occurring in the healthcare industry?
Yeah, absolutely. I mean, one of the biggest needs globally is to try and deliver more healthcare to more people for less money. And so what we're finding is companies investing in products and services that are really trying to generate efficiencies, and they're trying to treat patients in parts of the healthcare ecosystem that are much more cost effective without compromising the quality of care. So that's one of the biggest structural changes we're seeing. And some of the other kind of interesting dynamics that I mentioned before that we're really interested in are things like innovation. I think the healthcare industry is extremely innovative. And we're also looking at outsourcing as a theme as well, this idea that companies are outsourcing non-core activities to focus on their core activities and capitalizing on some of the expertise that might be available outside their wheelhouse, if you like.
Just moving on from that, there's been a lot of hype about inflation rising recently. Are you concerned about this, and how might you look to tweak the portfolio if rates start to rise?
Yeah, so we're keeping a watchful eye on inflation, but really the biggest perceived risk one is a relative one, and by relative I'm referring to other parts of the market that may be more attractive than healthcare, and that might be areas such as energy and materials. It's also worth adding that recent interactions with the management teams point to manageable increases in input costs and freight costs. So as we sit here today, we don't think it's going to have a huge impact on the underlying fundamentals of the industry. In terms of rising rates, I mean, it does have implications for highly rated, high growth parts of the healthcare universe, particularly those stocks that are carrying high levels of terminal value. And so that might impact areas like high growth medical devices or certain pockets of biotechnology. On a more positive note, rising rates can be a positive for some subsectors like the managed care companies, because they're insurance companies in essence, and they can use the premiums they collect to generate investment income.
Great. And just to finish off, could you talk about the vast difference in health expenditure per capita in the Western world compared to emerging markets, and how you expect or hope this to change in the next sort of 5 to 10 years?
Yeah, no, that's a great observation. I mean, the range is obviously enormous. So you've got some emerging market spenders listing as 3 to 4% of GDP on healthcare, all the way up to the US that's in and around the 17% level. And we just don't think it's too controversial to argue that the gap's going to close. And investment in healthcare will put upwards pressure on spending in emerging markets. Obviously, the rate and pace of that change is extremely difficult to predict, but over the medium term, we think it's perfectly reasonable that is the direction of travel.
Great, thanks so much.
You're very welcome. Thank you for the time.